All right, guys. So welcome to the grand finale, day 4 of the financial market bootcamp. We've started this journey since Monday, and we've had an amazing time thus far. We've been exposed to the world of Forex trading, the potentials, and how you can also be a player, how you can be a market player and start earning in the financial market. Right. We've looked at a whole lot of things that will help us get started. Right. So looking at the foundations, we've looked at the concept of market structure, talking about trends, support and resistance. We've looked at, our knowledge of market structure will help us know exactly the zones where we should be buying and selling from, right? And then we took a deep dive on that on day 3. Tonight, which is a grand finale, what I want to achieve is very, very simple. I want us to go into the concept of psychology, risk management, and then platforms that are available to you, okay, as a client of Tentrade to also accelerate your results to grow fast. Okay, so we're going to be talking about those things, and then we'll round off the boot camp. Okay, so let me just itemize everything we'll be doing tonight. We'll be looking at the concept of risk management. We're going to talk about a bit about psychology. We're going to talk about copy trading, which is a platform on Tentrade that you can leverage on as a beginner. We'll also talk about the funded trader program. Program. Okay, so let's talk about risk management, right? So when it comes to the topic of risk management, a lot of traders are not doing justice to risk management, which is why a lot of traders are not, they don't have longevity trading, all right? An average trader is active for 3 months, they blow their accounts, they go on sabbatical leave for another 6 months, they come back, okay, they blow accounts, they go on leave, all right? So very few traders are consistent, guys. Very few traders are consistent, all right? And the one pointer to your consistency, to you being active in the financial market is your knowledge and implementation of risk. You have to understand risk. When you start trading with risk in mind, it keeps you in the game for much longer, right? You are able to grow your resources very, very well. You can plan your trades appropriately. You know exactly what you are doing at every point in time. Amadudu said, you just described me. Yeah, all right. Actually, I describe myself because I never used to also use risk, all right? So we used to be in and out of the Forex market, all right? But once we start putting risk into perspective, right, we tend to, you become a whole lot more steady, all right? And one thing that a lot of people will tell you is that as a beginner, you can't do without blowing accounts, okay? You can't do without blowing accounts. But I'm going to tell you the truth. You can do without blowing accounts. You don't have to lose your account as a beginner. There's no joy in blowing accounts. Blowing accounts is not like a medal. It's not a medal of honor, right? The only reason why we blow accounts is because maybe, for example, you never had risk management in place or you didn't follow your trade plan, right? You can do without blowing account. You don't have to lose your capital, okay? Blowing your account is not a medal of honor. I'll repeat, there's nothing to be happy about when you lose money, okay? So I want to show you as a beginner how you can move fast, okay? Only if you choose to stick with everything that I'll talk about, right? How you can, make your journey fast, okay? How you can grow consistently, all right? There are a lot of people in the, common experience in the Forex market is that an average trader is trying to achieve so much in a particular period of time. So let's say you're trying to make a lot of money under 3 months, and you throw risk management out of the way. That journey that you thought was going to take you 3 months took you like 2 years or 3 years of blowing money, going in and out of the market. What if you used 6 months to follow a risk management plan, right? Even though you might think that you are moving slowly, but eventually you are going to arrive at a point whereby you are going to be very, very solid and formidable. All right. The first thing you want to consider in any business venture that you are starting is a risk. You look at what is involved. You have to count your costs first before you start a business. Likewise, in the financial market, count every trade, look at every trade as a business that you have. Of course, it's a business because your goal is to make money. Before you take any trade, you want to know your risk on that trade. And by risk, I'm talking about how much you stand to lose if that trade does not go your way. All right. Somebody might say that I'm being pessimistic. I'm not being optimistic. All right. But that is the best way that you can go about this thing. Now, true traders or good traders, profitable traders, don't only look at the profit first before considering risk. You need to consider risk first before profit. All right. So I said risk talks about how much you are willing to lose on a particular trade, talking about losses. So, and for risk, I want to recommend, since this is a intro to financial markets class, let me just give us a particular recommendation, right? When it comes to risk, you want to risk between 1% to 5% of your account per trade. All right. This is if we are just getting started. For beginners, I want to recommend this. All right. You want to risk anywhere from 1% to 5% of your account per trade. So if you are trading, let's say you are trading an account size of $1,000 $1,000 account. Okay. And then you are risking 1% per trade. 1% of $1,000 is $10. Okay. That means if that trade does not go your direction, you would only lose $10. And for you to totally blow that account, for you to lose the whole $1,000, it means that you need to lose 100 trades. Okay? Back to back, consistently or consecutively. All right? That's if you are risking 1% per trade. All right? If you are risking, let's say 5% per trade, 5% of $1,000 is $50, right? And if for you to blow that 1K account, that means you need to lose 20 trades consecutively. All right, 20 trades consecutively. All right. So once you have risk in place like this, it will be very, very hard for you to lose this kind of trades. I mean, losing 100 trades consecutively in my little years of trading in the financial markets, it looks impossible. Okay. If you have a trading plan and you know what you're doing, there's no way you lose 100 trades back to back. Okay. Or even though that happened, it will take you a long period of time to lose 100 trades back to back. Likewise, if you're risking 5% per trade, okay, before you lose 20 trades back to back, so it's going to take a long period of time. All right. So it keeps you in the game for much longer. All right. An average person, trader that blows accounts, all right, they blow their account after a few trades. Okay. So that means those kind of people are not really putting risk into perspective, or they're actually using risk, or maybe they're possibly over leveraging their account. They're using a very, very high risk. Okay. So I want to recommend, if you're a beginner, you want to risk 1 to 5% of your account per trade. If you are, if you are very aggressive, and there are people that are even beginners here that they have a high risk appetite. Okay. Some people love to take huge risk. Okay. That is their nature. Okay. Which is fine. All right. But you also need to put structure into how aggressive you want to be, so that you have some sort of a risk management plan. Right. If you want to be aggressive, you want to risk 10% to 20% of your account per trade. Okay. So I want to recommend you risk maximum 20%. If you be aggressive at all, you want to risk what? Maximum 20% of your account per trade. So if you are risking 10% per trade, 10% of $1,000 is what? $100. So that means if that trade goes against you, right, you would have lost $100. So that means for you to blow that account, you need to lose 10 trades, right? 10 trades consecutively. Now, if you are risking 20% per trade, 20% of $1,000 is what's it called? Is $200. Okay, it's $200. Right. Now, for you to lose this amount of money, for you to blow your account, you need to lose 5 trades consecutively. All right, ladies and gentlemen, please give me 1 minute. I'll be right back. All right, so we're back now. Risking 20% of your account, that means you have to lose 5 trades consecutively to blow your account. That's if you want to be aggressive. So at the end of the day, you want to trade your risk appetite. But whatever your risk appetite is, you want to have a plan to it. Put a structure around it so that you know exactly what you are doing. All right. Remember, I was telling you about what's it called? About the market participants, the hedge funds, the big banks, commercial banks, and things like that. Do you know that all of those institutions, they have dedicated teams, right, focused on risk, okay, quant analysis and things like that. Those people don't joke with risk. Okay, they are doing proper risk management. So if those big institutions, big firms understand, what risk is, all right, you as a retail trader, you should also have some amount of risk in place so that you'll be in the game for long, okay, much longer, right? So if we have this system in place and then you decide to now start putting risk into perspective, all right, so when 1% or 5% or 10% or 20%, all right? So we are going to be using a tool called the position size calculator, all right? Called size calculator, all right? So this is a tool that's going to help you calculate your risk, which will in turn tell you the right lot size that you should be using on every trade. Remember, we talked about lot size in day one. Lot size is what determines your stake in the market. Is what determines how much of the money you are trading with. All right. So this calculator helps you determine that lot size, whether you want to be using a micro lot or a mini lot or a standard lot. All right. So, and it's a free tool. All right. So how do we use it? Just go to your Google or your web browser, and then we are going to search for position size calculator. Okay. And you can decide to use the web version of this, or if you're into mobile apps, if you go to your Google Play Store or your App Store, and then you search for this keyword, you are going to see a lot of mobile apps, okay, that will do the same thing. All right, so let me share my web browser. Okay, so once we search for position size calculator, you're going to see this, your search results. Now, the first result is usually what you're looking for. It's a website on my FX book. So let me also copy the link here, and then I'm going to paste the link in the chat box for you to have the link. So just copy it. So I'm just saying Valentine's chart. He said, we are first risk managers before a trader. Yes. Okay. Awesome. Okay. So this is what the tool looks like. It's free to use. You can access this on your mobile browser or your web browser. So before you take any trade at all, you want to come to this page and do this, right? I still do this every single time I want to pick a trade. Don't get caught up in a scenario whereby you start guessing the lot size that you should be using, that you should use on every trade, okay? Don't be so in a hurry that you just begin to guess, okay? You might guess wrong, you might guess right, right? But if you want to be absolutely spot on, right, do this, right? It take you less than a few seconds, like less than 10 seconds once you are really, really fast with it. So it's going to ask you a few questions here, which is the currency pair you want to trade at a particular time. So if you are trading GBP, JPY, you select the currency pair that you want to take a trade on. So let's select GBP, JPY. Account currency is USD. Account size, that's how much you have in your trading capital. So let's put $1,000. Risk ratio in percentage. All right. So this is where you now tell the system how much of your capital do you want to risk per trade? Is it 1%, 3%, 5%, or 10%, or 20%? Okay, so let's put 4%. So you put 4. Now, next thing you have to fill is a stop loss in pips. So what does this mean, right? What is the value of your stop loss? Not the price, the value of your stop loss in pips. That means from your entry to so let's say over here, you take entry for a buy. This is your entry. For a buy entry, at the bottom here is your stop loss. So when you measure the pips move from your entry to your stop loss, what is the value in pips? Okay, so that's what they're asking for. So let's say this is 10 pips. 10 pips. So over here, you come here and put the value of the pip here. So you put 10 pips. Okay, and then for trade size, leave it as 1 as default there, and then you click on calculate. So when you do that, you see these particular values here. So for lot size, you are concerned about the sizing. So for sizing, the lot size that you use is 0.52 lots. So this is a lot size that you use. So if you use this lot size on this particular trade, that means if this trade goes against you, you are going to lose just $40 out of your $1,000, which is 4% risk that you set. All right, mind you, if you change anything here, the value of your lot size is also going to change. So let's say we see the same trade setup on a different pair, let's say on GBP NZD. So if I change to GBP NZD, you can see my lot size has changed to 0.64. All right. If I'm trading a different pair, let's say I'm trading Euro USD, for example. Okay, can you see my lot size has changed to 0.4? If I change the value of my stop loss to, let's say, 5 pips, calculate, okay, to change to 0.8. So everything here matter. All right, so you want to be very, very deliberate about using the right values. All right, if you are risking aggressively, let's say 20%, all right, you can say you'll be using 4 standard lots on a $1,000 account. All right, so your risk is what determines the lot size that you use. So when you see people online using big lots, okay, don't think that, so just know that possibly they have a risk in place and then they are fine with, losing that amount of money. All right, so if you have a small account and then you want to be using big lots, maybe you have to increase your risk. And then one thing about knowing your risk is that, for example, on this particular calculation now, if I'm risking 20% of $1,000, it says that the money I'm risking is $200. You want to be fine with risking this amount. It's also going to help with your state of mind when the trade is ongoing. Once you are fine with losing this, if you are not fine, if you cannot live with losing these amounts on this particular trade, it's best not to take that trade. Any amount that you don't feel comfortable risking, okay, that's not a trade you should take. So you want to reduce your risk. All right, so because if you trade, if you take a trade and then you are not fine with your risk, you might not be able to properly manage the trade as you should, because if you are in a drawdown, for example, you might be quick to close the trade in a loss. The trade has not even got into your stop loss, but because it's just a few pips against you, you started shivering, started shaking. You now close the trade in a loss, and possibly that trade was going to reverse into profit. All right, so only enter a trade that you are comfortable with the risk. It helps a whole lot with your mindset, with your psychology. All right, so these two sets should be your best friend. It should be something that you'll be holding dear to heart whenever you want to enter a trade. Okay, so we've talked about one aspect of this. So guys, if you have any questions about all of this, feel free to interrupt me. Let me know. Type in your questions in the chat box, or let me know if I should unmute you so that you ask your questions verbally. All right, so let's go to the next concept of risk management. We'll talk about that real quick and then we'll jump to other aspects. All right, so we've talked about how to know the right lot size you should be using, either a micro lot, mini lot, or standard lot. All right, so your account size has a thing to do with the lot that you use, right? Your trade setup itself has a lot to do with the lot that you use. That's talking about the number of your stop loss. And of course, the currency pair that you are also trading has a thing to do with the lot size that you're going to use. Okay, bottom line is that you want to have a plan. So you want to make a decision right now on each trade that I will take in the financial markets. What risk am I taking? Am I risking 1%? Do I want to be conservative or do I want to be aggressive? So you want to make that decision. All right. Or what you can also do is to have two separate trading accounts. One account where you'll be conservative and another account where you'll be aggressive. Okay, so you use different risk management plan for those two accounts. All right, so that can also work for you. All right, so on one account you are risking very, very small amounts of your capital. On another account you are being aggressive. You are trying to flip your account, like what you see people do on YouTube. You are being aggressive. Okay, so I don't recommend you to be conservative and aggressive on the same account. All right, you won't really grow that account. all right? Because it's a different mindset you need to have to run an aggressive risk, different mindset altogether, all right? So use different risk on different trading accounts, all right? So the next thing that I'll talk about, guys, is the concept of risk to reward. So we've talked about this. This is one aspect of risk management. Okay. The other aspect that I will talk about is the concept of risk to reward. Risk to reward. Mr. Day is asking, is it possible to have two accounts? Yes, you can have as many accounts as you want, as many, right? As long as the accounts are funded. So what you want to do is to reach out to your account officer and let the person know that you want to open an account, another account, and then you want to fund it, right? You'll be given a new account details, and then you'll be able to fund it. Okay. So talking about risk reward. Now, how can I explain this in very clear terms? Good. So let's start from risk. We already know when I say risk, what am I talking about? I'm talking about losses. I'm talking about stop loss. Okay, stop loss. And when we say reward, okay, we are talking about take profit. Okay, remember that every trade that you will take, you should have exit points. Your exit point is either both your stop loss and take profit. So you must know where you exit if you're in a loss, and when you exit if you are in a profit. Okay. So let me tell you the common practice out there for majority of traders. You must agree with me, or you will agree with me, that most traders are not profitable. Okay. Forget the hype you see online, right? Social media is not real life. Okay. When you pick at random 10 Forex traders, even 10 popular Forex traders that you see online, put them in a room, all right, and give them an account to trade. I can guarantee you, with trading consistently for 2 to 3 months, all right, maybe just 1 or 2 people will be profitable at the end of 3 months, right? Not everybody is profitable on the long run. And most people would only majorly show you their wins online and not really emphasize on losses. All right. There's a particular, so when I was learning how to trade, I think it was back in 2019 or 2020, there's this particular white guy that I was following on Instagram. I mean, his Instagram page was popping. When I say popping, it will show us before and after photos. His YouTube is popping, everything. I'm like, if I should pay for this guy's mentorship, I mean, I was literally saving up money to, pay for his coaching program, or like for his academy. Eventually, I entered the academy. Okay, so he had a signal group as well. And the way he would paint the signal group was like the Holy Grail. So from the outside, we were looking at the perfect mentor, the perfect strategy. Okay. It was not until we got inside the system that I noticed that these people are not actually, marketers. Okay. They were not actually real traders. They didn't know exactly what they were doing. They were losing a lot of trades, and we're not giving people outside there the update. So it's not being realistic, right? I said that, to say that a lot of traders are not profitable. And one reason why we are not profitable is that, as traders, is that risk. So an average trader, for example, is taking a trade with a stop loss of, let's say, 30 pips stop loss. And then once they are in, so stop loss 30 pips, stop loss 30 pips, and then once they are in profit, okay, they are fine with, let's say, 10 pips, or let me be generous, like 15 pips take profit. All right, so that TP, it is either they set the TP by themselves, or when they are in that kind of profit, they close the trade manually. All right, so most traders don't even allow their trades run and get to TP. When you see small profits, you think that you are fine, you simply close the trade for fear of the trade reversing and going back to hit your stop loss. Okay, that's a recipe for disaster, right? You can never ever grow your account if you have this kind of structure currently in place. All right, and this is what a lot of traders do. Okay, many traders do this unconsciously or consciously. They do this. They don't have a risk to reward plan. And risk to reward, if I say it's a lot, right? In Forex trading, if there's anything called Holy Grail, if there's any Holy Grail, it is not, there's no Holy Grail when it comes to trading strategy. Okay, the Holy Grail is in risk to reward. If there's anything like Holy Grail, right? This is the secret sauce, all right? Now, you don't want to have this kind of setups, having a higher risk than your take profit. Nobody does a business and then your risk is more than your profit. That's not business. That's charity. Nobody does a business that your risk is equal to your reward, equal to your profit. That's not business. Real business is when the reward or the profit far outweighs your risk. That is how you can be sustainable. All right. So your cost of production in a business must be lesser. Okay, must be for you to make profits, your cost, okay, must be lesser, way lesser than the profit. I don't know if that makes sense. So when it comes to the foreign exchange market, my recommendation for risk to reward, you want to have a minimum risk to reward of a ratio of 1 to 3. Okay, 1 to 3 ratio. Okay, what it means is that so by 1 to 3 risk to reward, it means that if your stop loss is equal to 10 pips, right? You want your take profit to be at least 30 pips. Take profit 30 pips. All right. So that means your reward is 3 times, at least 3 times your risk. All right. If your stop loss is 20 pips, your take profit should be what? At least 20 times 3, which is 60 pips. So you want to optimize your trading strategy. We are going to get there eventually. So when we talk about trading strategy, you want to optimize your trading strategy such that it is able to produce at least a risk to reward of 1 to 3. Okay, for me, this is the Holy Grail, right? Even though you have a trading strategy that's a trading strategy that has a very, very low win rate. If you have a low win rate, but you have good risk to reward, all right, you are going to be in profit at the end of the day. All right. 1 to 2, Mr. Dragon, 1 to 2 is like average for me. So let me give you one reason why 1 to 3 is very, very good to have. So now there's something called losing streaks. Losing streaks in Forex. Losing streaks is simply you losing trades back to back. And it happens to the best of us. All right. Personally, I've had, I think, about 5 back-to-back losses before. Okay. I was losing every trade that I was placing for like a week straight. Okay, that's a losing streak. Some even have more than this. Okay, some have less. So if you have a losing streak, for example, as much as if let's say you even have a very, very strong mindset, your psychology is 100%. Your mindset is to try and recover these losses first. So you are in recovery mode. And for some people, when you are in recovery mode, you also tend to shift into revenge mode. You are trying to get back at the market. So let's say you're in recovery mode and then you're trying to recover your losses. If you don't have a good risk to reward in place, you'll be under undue pressure to recover your losses. All right. So if you have a risk to reward of 1 to 1, for example, so if you are risking 10 pips to make 10 pips profit, that means for you to recover from this losing streak, you need to win 5 trades back to back. You know, it's possible, but that's a lot of work. And might take time as well. Okay, you need to win 5 trades back to back to recover a losing streak of 5 losses. All right. If you have a risk to reward of 1 to 2, okay, so you are risking. So let's say these 5 losses now, maybe you risked 1% per trade, so 5% loss. 5% loss. Okay. If you are risking, if your risk to reward is 1 to 2, that means on every trade that you win, okay, you grow your account by 2%, right? So 1 to 2. 1 to 2. Okay, that means you are risking 1% to make 2% profit, right? 2%. So with 1 to 2 risk to reward, right? You need to win trades, okay, to recover. Okay, which might also be a lot of work. If you have a risk of 1 to 3, that means on that particular trade, you are growing your account by 3%. Okay, that means you need to win 2 trades to recover, and then you even be in profit. 2 trades to recover. All right. If you have a risk to reward of 1 to 5, for example, that means each trade will deliver 5% profit for you. Okay. That means if you have a risk to reward of 1 to 5, that means you just need one trade, okay, to recover a streak of 5 losses. You now see that if you have a trading strategy that can deliver good risk to reward, Even if you're having a bad week or a bad month, you only need to win 1 or 2 trades. It will put you back on track, such that even when you start having those losses, you won't be moved in a way, because you are only looking for that one trade, okay, that will help you recover and also put you in profit. Okay, so my recommendation is to have a minimum risk reward of 1 to 3. You want to optimize it to be able to give you at least 1 to 3. If you see a trading setup that cannot deliver at least 1 to 3 for you, it's not worth it. It's not worth it. Don't take it. If you see a trading setup that cannot deliver at least 1 to 3 for you, ignore that trade. It's not worth it. Okay, it's not worth it. All right, good. So let's go deeper into why you must take risk to reward into consideration. Okay, so now talking about win rate. No win rates, right? There is no 100% trading strategy. Okay, what it means is that no trading strategy will deliver 100% wins. Okay, so that means you will lose trades, and then you will also win trades. You win some, you lose some. Forget the hype, what you see on Instagram, what you see on YouTube. You know, when you go to YouTube now, you see people saying, my winning strategy, 98% win rates. Does not exist. Those things are just marketing. Real life. Even the hedge funds, the big banks that can move the markets, they cannot guarantee you 100. They can't guarantee themselves 100% win rates, because they also make losses, a lot of losses, and then they recover losses later on. So you as a retail trader, how can you guarantee yourself 100% win rates when you don't even control the market? So it's not realistic. It's not real. Okay, I want to be totally honest with you guys. Totally honest with you. If you are doing well as a trader, a win rate, you are very good with a win rate of 60%, or let's even say 50%. You can see, I'm not trying to hype anything, okay? Because most traders don't even have a win rate up to 50%, right? Most traders have a win rate of, let's say, 40% or even 30% win rate. So if you have a win rate of 50%, what it means is that if you take 10 trades, from 10 trades, you win like 5, and then you lose 5 trades. Okay. Now, let's now add our knowledge of risk to reward. If your risk to reward, okay, is 1 to 1, you will see that doesn't make sense. So let's say you are risking 1% per trade. That means on every trade that you win, you're only making as much profit as your risk. So if you are risking 1% on that trade, you'd also only make 1% profit. Okay, so that means if you win 5 trades, you've only grown your account by 5%. If you lose 5 trades, you've lost 5% of your account. As a matter of fact, you might even be in deficit because of spreads and possibly swap fees. So at the end of the day, with a risk reward of 1 to 1, after taking 10 trades, you'll be at break even or even a little bit of loss. And these 10 trades can take like a week long of work, or 2 weeks long, or 3. Who knows how your system works? But it does not make sense if you've spent so much time to wait for setups to analyze, and at the end of the trading period, you just break even. Okay, it's not make you happy. Okay, so let's flip the bottle here. So let's say you have a win rate, the same win rate, but you have a better risk reward of 1 to 2. Okay, of 1 to 2. So that means for every trade that you lose just 1%, since you are risking 1% per trade. And for every trade that you win 2%. So if you win 5 trades, that means you've grown your account by 10%. If you lose 5 trades, you've grown your account by, you've lost 5% of your account. So at the end of the day, you'll be in 5% profit. Maybe minus spreads and everything, maybe you'll be in 3% or less profit, okay? At the end of 10 trades, okay? Which is not bad. It's a bit of, an average result, to be very, very honest, okay? But with these win rates, if you have a risk reward of 1 to 3, okay? Of 1 to 3, if you win 5 trades, all right, that means you'd have grown your account by 15%, and then you lose 5, you lose 5%. At the end of the day, right, you'll be at 10% profit. So maybe minus spreads and everything, you are at, let's say, 7% or 8% profit in that particular trading period, which is not bad. If you can achieve this, for example, all right, it's good. It's 8% each month is solid profit. Guys, if you can make 8% profit on your capital every month for 6 months, trust me, banks, hedge funds, portfolio managers will be looking for you. You'll be hot cake. Even brokers will be looking for you. You'll be hot cake. All right. So it's not an easy feat to be able to make this kind of money consistently. And that's because you have a good risk to reward. Okay, so let me make it a bit more realistic. Most traders don't even have a win rate of 50%. Most don't have a win rate of 50% because most are not profitable. So let's say traders have a win rate of, let's say, 30% win rate. Okay, what it means is that you win 3 trades and then you lose 7 trades. Okay, and we are risking 1% per trade, but you have a good risk reward. Okay, let's say you have a risk reward of 1 to 5. For example, risk reward of 1 to 5. Okay, that means for each trade that you win, you're going to grow your account by 5%, right? So for these 3 wins that you won, you're growing your account by 15%. The 7 losses, you have lost 7% of your account. At the end of the day, you would have 8% profit. You can see you had a very, very ridiculous win rate, 30%. But because your risk to reward is solid, okay, at the end of the day, you still be in profit. Okay, that's why I said if there's any holy grail in Forex trading is optimizing your trading strategy to give you good risk to reward. And the start is what having at least 1 to 3 risk to reward. Okay, give me some feedback in the chat box, guys. Do you understand this concept so far of risk management about risk to reward and how to calculate lot size? If you understand those concepts, type in yes in the chat box. Let me know if I'm carrying you along, guys. Type in a yes if you understand what has been said thus far. All right, Derek understands. The button understands. Who else understands? I'm going to do so following steadily. Perfect. All right. So let us stop here under risk management. Okay, because of time, I want us to round up in the next 30 minutes max. Okay. Now, once you have this in check, and then you start implementing it. Like, and I'll show you guys, you are doing what the majority of forex traders don't do. And because you are doing what the majority are not doing, you are bound to experience a different result. So automatically, you are setting yourself up to be at the top 1% of traders that take risk seriously. Okay. And once you start doing this, your longevity in the market is sure. Is sure. You would be trading for so long. All right. So let's stop there on that slide. Now, let me talk briefly about psychology. Psychology. Okay. So when we talk about psychology, psychology is simply your state of mind as a trader. Okay. Your state of mind, your mindset. Okay. What goes through your mind before you take a trade, while you are in a trade, and after you take a trade? What is your thoughts pattern, like your thought process? You know, what inspires you to take a trade? All right. What is your state of mind as a trader? That is what psychology is. All right. And it is truly what separates profitable traders from those that are not profitable. All right. Because to trade in the financial markets, you need to have a strong mindset. You need to be straight in that, like, you need to know what you're doing mentally. I say it a lot, Forex is the hardest way to make easy money. All right. Forex trading is the hardest thing that you can do to make money. Okay. Because your money is actually on the line every single time you trade. Okay. Your money is on the line, and then you are seeing your money go in front of you. Not many people can see that they're in a loss, and then they'll still be in good standing psychologically. All right. Not very many people can see that they are in a drawdown, and then they still hold the trade and then don't close the trade. Okay. So how can I help us get started properly with psychology? One major thing, I have a special webinar where I go deep into psychology. All right. So I'll look for the replay and then send to us, possibly, or you wait for the next session, maybe next week or in 2 weeks' time, where we'll deep dive into psychology. But let me just talk briefly about it. Something that can help us get started as a trader, right? And I already mentioned a few things, all right? One major thing that traders, struggle with is the fear of losing, the fear of loss. So let's start from fear. Okay, the fear of loss. Okay, so you are trading with $1,000, and then based on your risk, maybe you're in a drawdown of $50. Okay, and maybe price has not even got into your take profits. But because you don't want to lose more than that $50, you simply close the trade. Okay, but if you've put risk management into your plan, and then you use the position size calculator to determine your lot size, it will tell you how much you stand to lose if this trade does not go your way. And then you want to be fine with that amount absolutely before you go ahead and place the trade. So one way whereby you can eradicate fear of losses is to do risk management and be fine with losing that amount of money. If you are not fine with that loss, don't take the trade. All right, so that's one step. Be fine with losing. You also have to realize that Forex trading is a every time, it's not win-win every time. You win some, you lose some, right? Making a loss is part of Forex trading. It can't be smooth sailing every time because life does not work that way. There's nobody that, had it easy. Even Jesus Christ did not have it easy. It did not have it easy. Who are you to say you want to have it easy? All right, so you're going to win some trades and then you're going to lose some trades. So you have to be comfortable around losing. All right. Even when you do your normal business, maybe you're into online business or your normal brick and mortar business, there'll be a time that you make a loss. Maybe, for example, this cash. So let's say you have a shop, for example, like a physical shop, and you're in Nigeria now. People don't have cash to come and buy stuff in your shop. It's going to affect your sales. Everybody that owns a shop is complaining that they don't get as many customers like they normally get. Okay, that's a loss on your part. All right. Let's say you are into online business and then you run a lot of Facebook adverts. Maybe you run an advert on Facebook one day or Instagram and on YouTube, and your adverts do not convert anybody. That is a loss. But eventually you get it right. You try it again and then you make a profit. So look at it as well. When it comes to Forex trading, you are going to win some trades and then you will lose some trades. But your consolation is that you are trading with risk management, and then you have a trading plan. You have a trading strategy. All right. So that should help you put things into perspective. All right. Also, talking about fear, there's also something called the fear of missing out. The fear of missing out on a particular setup. So let's say you belong to a particular signal group. Now, most beginners would eventually join a signal group or the other because we like something easy like that. So let's say you belong to a signal group and then somebody posted, they gave you a signal and then they are telling you that, this trade is now in 10 pips profit, 5 pips profit. Maybe you saw it when they posted the entry, but you did not take it. But because they are telling you that that trade is now in profit, because of fear of missing out, you now quickly go to your own MT5 to go and open a trade. At that point in time, I'm pretty sure you've thrown away risk management. You are not using the right lot size for your trade. And maybe it is that point when you enter the trade that price will start, going back and then hit your stop loss. But for those people, it will maybe hit their break even because they would have moved their stop loss to break even. Or maybe you analyze that particular setup by yourself, and then you had been waiting for that setup to align. Maybe you're waiting for several hours. Okay. And maybe something happened to your phone. You are in Nigeria, you didn't have light, or something happened to your internet connection. When you go back on your charts, price has moved away, price has gotten to your entry, and then it has started going in profit. Because you don't want to miss out on that trade, you quickly enter at a price that is not in your trade plan. That is not where you're supposed to originally enter. Okay, which will widen your stop loss. It's going to affect the whole trade because you did not enter at the right price. All right, so you want to eradicate that fear of missing out, that FOMO. Only trade what is in your plan. If anything is outside your plan and is playing out, don't worry about it. There would always be another trade setup. We have 28 currency pairs. The Forex market is going nowhere yet. Maybe when Jesus Christ comes back, no more Forex markets. We don't know, because At that point in time, there'll be one currency, right? But now, right, we have a lot of setups will be available to you. All right, so stop fear of missing out, okay? Eradicate it, all right? So once you can remove fear from your trading, all right, you will be good. And then another aspect of fear is that, so let's say you've had losing streaks. You lost 3 trades back to back, and then you see another trade setup. Because you don't want to lose another trade, you now decide not to take that trade. How did you know that it's not that trade that will put you back in profit? How did you know? How did you know? Okay. So whenever you see a setup that aligns with your plan, take it. Take every setup that aligns with your plan, as long as you have risk management in perspective. If you've not hit your target in that particular week or month, okay, take it. Take every trade that you see that aligns with your strategy, and then you'll be good, regardless of your experience, either you've been in a losing streak, because you need to recover. How will you know that you recover if you don't take your chances? So take risk. All right, take risk. So you want to eradicate fear and trade like a robot. Okay, trade like, we program, like, like somebody programmed you to trade when some certain conditions occur. Okay, so take your trades regardless. All right, so it's a major thing that you have to deal with, and it will not jump on you. You will not just suddenly stop being afraid. All right, it's going to occur to you. It's going to happen with time. So you want to give yourself time to learn this particular lesson. For some of you, it might take you a few weeks. Some might take you years. Some might take you months. Depends on how fast you want to learn and implement these things. All right. Now, the second thing that I'll talk about before we go to the next topic is the concept of greed. All right. By default, I think every man is greedy by default. All right. We want to accumulate wealth, excessive wealth. Okay. If you talk to a 5-year-old or like a 10-year-old, teenagers, Gen Z people, right? They want to be billionaires and millionaires at all costs. Everybody is hungry to make money at all costs. And it's something that I feel is, innate for most human beings. And when we bring it to the financial market, because we are greedy as human beings, an average trader, because you've heard about what can be made in the financial market. You are trying to fund your account with $100 and you want to make $1,000 in 1 week or in 1 month. And I understand, maybe because you have bills to pay, your rent is due, your child was put to bed, you want to pay your child's school fees, or you want to jackpot from Nigeria. So you need money. Understandable. So your greed is motivated by the bills you want to pay or the kind of lifestyle that you want to live. But greed, you can't be a profitable trader and be greedy. All right. For example, what greed will do to you is where you are supposed to exit a trade in profit, you will not exit the trade. Okay, so let's say your trading strategy, your take profit zone is meant to be 30 pips profit. So price gets to that 30 pips and then you don't take profits. You are waiting for price to go up, to still go your direction. You think that price will still hit 50 pips because you're trying to make more. At the end of the day, right, price might reverse and then come back to hit your stop loss. You've lost that trade because you were just greedy. you were just greedy. Okay. The day I learned my lesson on greed was the day I lost $5,000 in one day. All right. So that account, I funded it with, I think, $3,000 during the pandemic. And in about 2 weeks, I grew the accounts. I had running trades stacked up running, and I grew it to about $4,500 plus. Okay. So normally, I should have closed my running trades when I was in 1K profit, normally. But I don't know what happened at the time. I think I wanted to do some things or buy something. I don't know what happened. I was inspired by something. So I wanted to hit that target. I'm like, this thing, the way I analyze it, it will still go my direction. So I didn't close the trade. I didn't manage the trade. I left it because, of course, there will be drawdown. So like I created room for drawdown. So price was going down and up. So price, so I was in profit of $4,500, and then price retraced down to, I think, 2,700. It picked up again, then price got to like $5,000. Why didn't I close my trade when I was given that second opportunity? But I was still bent on making like $6,000 or more. Okay, so I think it was now during the agent session, I went to sleep. The next morning, before I woke up, my money, everything wiped out. All right, because I had a lot of trades open. I was stacking, okay, all these martingale thingy. All right, so I was over leveraged on my positions, okay, and eventually my account was wiped out, right, and that happened under 24 hours. I had the opportunity to make over 50% profit on my account, but because I was being greedy, right, I lost everything. So since that was the day I learned my lesson on greed. Okay, and so as a trader, you want to kill greed and try also not to over leverage. All right, an average hedge fund, when they're trading in the financial market, they are good with 10% profits or 20% profits in a year. They are well and good. But we as retail traders, if we don't make 100% profit in a month, you are not satisfied. You are trying to get rich quick at all costs. You are over leveraging. You are throwing risk out of the window. You are using, and most of these things is, inspired by a lot of things that we see on YouTube, which is fine. There are people that legitimately, they are able to turn an account of, let's say, $50 into $5,000 in a period of time. It's happened. It's very, very possible in the financial market. But maybe that person has been trading for 5 years. It took that person 5 years of activity to get to that level where they're able to do that to get that kind of results. But you've not put in the work, you don't have the knowledge, okay, or the stamina to produce that result. You are trying to get the same results when you've not paid your dues. You are trying, so it's going to haunt you, which is why the best place to start is to start conservatively. Start conservatively. Greed will get your account blown times and times over. Okay, and for some of us here, you won't learn your lesson until after maybe 6 months, after 1 year. It's fine. All right, it's fine. So eventually, when you want to be profitable, you have to eradicate greed. And I'll talk about the last thing here when it comes to psychology. Let's talk about being overconfident. Okay, overconfidence kills. It's good to be confident, but it's bad when it is too much. Okay, so you are in a winning streak. You are winning 3 trades back to back, 5 trades back to back, and then you think that suddenly you are on top of the world. You now stop using maybe stop loss. You stop checking some confirmations. You stop, You now throw away your trade plan, you start doing your risk management, you just keep using random lot sizes. It's going to haunt you. It's going to haunt you. When you think you have a total understanding of the market, that is when you start losing. All right. You want to take every trade seriously and follow your plan to the letter. Don't take any trade that is not in your plan. Okay, don't be overconfident. It's when you are overconfident, you will not pay attention to some details. All right. So what to keep you in the game is to follow the process, your process. Okay. Every step counts. Don't skip a step before you take a trade. Now, once we start talking about trading strategies, all of these concepts will make a lot more sense to you. Okay, you want to eradicate fear. Okay, do your best to reduce your greed or not be greedy at all. Okay, and do not be overconfident. All right. Am I communicating, guys? Let me know if what I'm saying makes sense so far. Give me some feedback in the chat box. Let me know if you are getting value. Okay, before we move to the next step, give me some feedback, guys. Just type anything in the chat box to let me know that you're following me. All right, thank you, Olusegun. Thank you, Derek. Okay, so thank you, Christopher Kigbe. Abatunde, thank you. All right, good. So let's move forward. I'm going to do thank you. Good. So we are following. Now, I'll stop there on the psychology. Now, let's talk about some things that you can leverage on the 10 trade platform. I want to talk about the copy trading and the funded trader program in a nutshell. So I'll just talk about it and then show you where you can see it on your dashboard. Okay, so I won't really go deep into it because we have dedicated webinars for these things as well. But I'd like you to check it out, go to the Tete website, and then see how these things can benefit you. All right. So let me talk first of all about the copy trading program. So copy trading is simply, as a beginner, before you start taking trades by yourself, okay, you can leverage on profitable traders. Okay, so those traders are already profitable and then they are making money already. So TEDtrade has a system whereby we connect beginner traders, okay, to profitable traders or people that are busy. So for some of you, your work might not allow you trade. Okay, you are very, very busy. So if you are busy, you can connect your account to a profitable trader. Okay, and then that person trades on your behalf. At the end of the month, once that person makes profit for you, you split profits. All right, so I'm trying to log into my dashboard now. Let me quickly show us something. So let me share my screen. Give me a second. Where is it? So, and everybody has access to this. So I'm sharing a dashboard now. On your 10 trade dashboard, you have access to this. On the left-hand side, you see copy trading right here. So you want to click on copy trading rankings. When you click on that, you see all of this. These are all the traders, all the fund managers that you can connect your account to. And before you connect your account to them, all right, you can check out their performance first before you go ahead. Okay, so let's just do this guy, for example, this GeForce guy. So when I click on GeForce, it will tell you his terms. All right, let's click on show more. All right, so to copy this guy, you need a minimum of $200. Okay, this guy is a scalper and intraday trader. He trades only gold. All right. And when you check out these results, let's scroll down, for example, this guy started trading from last month, February. He's also a client of 10 Trade. So last month, based on his results, he made a profit of 49%. This month, currently, is on 15% profit currently this month. All right. So far, he has been consistent. All right. If you check out some other aspect of the results, let's go to trading. So there are things that you just check out. Let me quickly skip. Let's skip to equity, for example. Good. So equity, you can see this guy in 2 months of trading, the maximum drawdown he has had is 19.23%. So less than 20% drawdown. So that means the highest drawdown he has had in 2 months of trading is 19%, which is, cool. So that means he's not really an aggressive trader. He's not being so much aggressive. All right. So you can choose to go with this guy. And so before you go with anybody, you want to take your time out and check out all of the statistics. Okay, let's go to trading, for example. Let's see something. Check out the charts, the equity curve. Okay, consistent. When it's in a drawdown, eventually it picks up. All right. Let me check something. Okay, under instruments, you see account, trade statistics. Okay, so this give you, so this guy, you can see trades won. He has won 130 trades. Trade lost. He has lost just 2 trades. So this guy has a massive win rate. So possibly this is a bot trading, possibly. Okay, or is one trading by himself. Okay, so you can see the consistency that this guy has. You see, so average trade duration 9 hours, so an intraday trader. Okay, so all of these details is what you look at before you go ahead with any trader, with any fund manager, and then there's a lot of them here. So once you decide on the one that you want to follow, you just go ahead and then you click on invest, and then you take into a portal to do all of your risk management settings. Okay, so, and if you are doing copy trading, you are in total control of how much you are risking. You can unsubscribe from any fund manager when they lose a particular amount of money. So you can set your risk tolerance, your threshold. Maybe if that person loses up to 20% of your accounts, you want to be disconnected from that setup. Okay, so you are in control of everything. Okay, so that is copy trading for you. It is available for you if you want to get started with it. So while you're still learning how to trade by yourself, you can get started with this. So you are making an informed decision to copy a trader based on their performance. All right. So the next thing that I'll talk about, guys, is the funded trader program. And then for some of us here that are already trading and they're making a bit of results, you can leverage on the funded trader program. So this program is simply a platform whereby 10 Trade wants to give you access to capital to trade. So 10 Trade can fund you up to $500,000. And this funding is instant funding. So unlike other prop firms that you would have to do evaluation, they'll give you like a demo account to trade first. You prove yourself before they give you a live account. On 10 Trade, you are getting instant access to a live account. All right, so over here on the bronze plan, you get instant access to 10,000. Okay, you pay $300 for that. Okay, to get instant access to this, or 30K, $900. Okay, so there's also a starter pack whereby we'll give you access to $3,000 and just need to get to enroll with a one-time fee of $100. So to get access to that starter pack, you want to reach out to your account manager and then we'll set that up for you. So as a funded trader, you can start trading real huge capital, and that will reflect on your withdrawals as well. Okay, so it helps to put things in perspective. We also have a dedicated webinar whereby we talk about this program. All right, so you want to look out for these webinars, join them so that you learn exactly how to make this happen for you. All right, so I'll be doing these webinars next week as well. So I'll send us the link to join the webinars. Okay, so wrapping up this session, let me give us on Wednesday, I gave us an offer for people to join my academy. For those that want to go deeper into Forex trading, right? How can you get into my mentorship program? Okay, so let me just do a recap real quick. All right, so my academy is called the Vantage Trading Academy. All right. And then the goal is to give you all you need to become a profitable trader, earning something consistent on a monthly basis and make you a funded trader, help you become funded. Okay, so you'll be getting access to the training library. Okay, so the training library contains over 15 hours of video content that will teach you, help you from scratch, from beginner to professional level. Okay, you also get access to a trade signals group, trade signals and ideas. So what I'm looking at trading for a particular trading day, I'll be posting it on the platform so you can take the same trade that I'll be taking. All right, we get access to a bi-weekly live trading sessions. Okay, so this is on site, so physically and online, whereby we trade together. You'd also have access to a support group. Okay, support group, which is a chat community, right? And then of course, we get access to the Forex and Chill, which is a quarterly hangout session for people in my community. All right. So normally what I charge for this is $100 every month. Okay. $100 monthly for this. But the offer that I'm giving you guys is, rather than paying me $100, I want to focus on serious traders, those that are ready to give Forex a shot. And all you need to do is to make at least a deposit into your 10 trade account and make a deposit of $150 deposit minimum. Once you make a deposit into your trading account, all right, you want to reach out to me. Most of you here have my number, right? Reach out to me that you've made your deposit, all right? We'll verify your deposit and then I'll put you on the program. So you'd have access to the trading academy. Okay, so that is the offer, and this offer is lasting, okay, between now and next week, Friday. Okay, so 1 week. So you have 1 week to take advantage of this offer. So it's not a lifetime offer. So it is time bound. Okay, so 1 week is enough time actually to come up with this. So remember that this money belongs to you. Okay, it's not coming to anybody. It's going to your account that you use to trade. All right, and even after 1 month, you might have made some profits using the live session signals or the trade signals that you receive on the account, on the academy. So, and most importantly, you get mentorship from me, okay, and from other educators as well in my community. All right, so take advantage of this and take your trading game to the next level. All right. Do we have any questions, guys? It's been an amazing 4-day run of this bootcamp. Any questions? Any questions? Guys, if you got value in this bootcamp, if this bootcamp was worth it for you, okay, type in value in the chat box. If you feel that, you know, you got serious value, and be very, very honest. Okay, type in value. All right, type in value in the chat box. Let me know if it was worth it. Someone said huge value. Awesome. Okay. Who else thinks this sessions has been very, very valuable? Derek said plenty value. Christopher said big value. Awesome. Okay. John said value. Babatine said value. Good, 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 good. So now what you need to do right now is to put these things to work. Okay. Take action. Take action. Take action. Don't just learn and then you won't do anything about it. Learn and then do. And one thing that being part of a community would help you with is accountability, is to keep you on check, right? You need to be a part of a community to do something, be a part of a tribe. All right, so you want to take advantage of this offer right here and join my trading academy. All right, and I'll be with you every step of the way in your trading career. All right, if you have any questions after tonight, you want to reach out to your account officer, okay, or reach out to me, and then I'll answer all of your questions and get you started. All right. Any questions, guys? Any questions? Any questions? Addition, subtraction? You can type your questions in the chat box, or you can unmute. You can let me know, and then I'll mute you to ask your question. It can be questions about anything, maybe about what you've learned from day one, or about what you've learned today, or about this current offer, or about the broker, or about anything at all regarding around forex trading. So I'll just wait for a few seconds or to 1 minute. If you have any questions, you can think about it. All right, so I'm going to allow you guys to unmute yourself. So once you have a question, you can unmute yourself and then speak. You can unmute yourself and speak. So I'll just wait around, guys. So we've come to the end of the bootcamp, guys. So what you need to do after this bootcamp now is to keep joining our live sessions. So every week at 10 Trade, we run daily webinars. As from the first week of April, we are also going to be having live physical sessions at the 10 Trade office in Lagos. So if you're in Lagos, you can walk in at any day of the week and then get trained and get mentored. Okay, so join those sessions, keep learning, excuse me, keep learning, keep implementing, and then the result is going to follow. All right, so no questions so far. Does that mean everybody understand everything clearly? All right, good. All right, guys, so I want to say a very, very big thank you to everybody here for being here the last day, the grand finale, for taking your time to devote 4 days to learn, right? I can only wish us the very best in your trading career, all right? It can only get better. So you need to be determined, take it very, very seriously. Only those that take Forex seriously will get paid seriously, okay? So I wish us all the very best. Next week is another trading week. Use this weekend to back test, to get a better understanding of the market, spend some time on the charts, understand the charts better, okay, and then prepare yourself for the next trading week. All right, I'll see us on the next webinar. Till then, God bless you. Have a remarkable weekend, guys. Bye-bye.